exclusive.
Hello, I'm Emmanuel Munsanje from Malta, Zambia, coming with costing. And this time around, we are looking at Chapter 4 in costing, particularly costing materials. Costing materials. So you would want to know what are materials when you're doing business. Let's bring our traditional business like you're making your baking bread. The materials could be the raw materials that go into bread, like the flour, the sugar, the yeast, the baking powder. So such need to be costed because at different times you would buy them at different prices. So there's a way in which you can cost them. Stock control. What is stock? Stock is inventory. The goods that you buy, you put them in the warehouses are called stock. You must control. Don't underbuy. Neither should you overbuy. You must balance up. If you don't control, there are ramifications. There are a lot of implications because there are a lot of costs that can escalate. One, there's ordering cost. Ordering cost is what you incur as you go for procurements. You have to pay your staff, you have to buy fuel, you have to do the logistics. That are ordering costs. The receipt of stock. As you receive the stock also, there are certain costs that actually go with that is documentation, offloading, and other things. Storage. You take what you receive in your warehouse, and there could be pilferage, there could be insurance that you need to do, and many other costs. Then the issue cost. As you take to production, you remove from the warehouse and dispatch to a relevant department that needs the material. So you need to control the stock in order that you maintain sufficient stock. Don't run out of stock. So now, when you look at the act of purchasing, it is a procedure really, and you have to document, and there are various documents that you have to be familiar with. For example, there is purchase requisition, meaning somebody from a certain department makes a request, and that has to be documented. And this is what the document looks like, purchase requisition. And when you look at purchase requisition, you have details where there's a department where you are requesting from, you have a suggested supplier, and requested by your name there. And on the other side, you have to have the date requested and many other things. But then you have to bring details of quantity. What quantity are you requesting? The code number, the description, the estimated cost, and the total cost. So this is part of the documentation that you need when you are costing. When you do that, you have to make orders, and there's another document for ordering. So following your request, you need to order. Now, this is what it looks like. This is the purchase order with the reference number. You address it to a relevant supplier of your choice, and this is a purchase order. And then you have the details that you instruct the supplier to say, please deliver to the address, blah, blah, order by, purchased by, and so on. In other words, this is a step towards getting what you want. And then after that, the goods will begin coming. You have reception and inspection. As they come, you receive them and you inspect them. There are relevant documents that come with the items that you ordered. This is goods received note, GRN. And then there's purchase invoice, and then you have to do this documentation. This is goods received notes. That is the note that will accompany the goods that you ordered. It has the date, our order number, supplier and advice number. It has also warehouse copy. And then when you look at that one, you will have to have the quantity and then the relevant documentation should be done. In other words, this is the goods received note that will authenticate that you have received the documents. Storage. As the goods come, they need to be stored in a very good environment. So now you have materials that are stored in the warehouses. You have goods storage, the goods storage must facilitate. One, as you make your storage, make sure that when you need the goods, there is a speed issue, there's quick identification, there's correct location, efficient usage of space. In your warehouse, certain decorum must be observed, because if you don't observe it, you just like stockpile things, it will be very difficult when you want to issue the goods. The bin card. The bin card shows what you receive and what you issue. This is what it looks like. It will show details like the date, the quantity, GRN, the location, the store's ledger number, the date, quantity, and so on. In other words, as you have your goods in your warehouse, that is receipt. But when you want to use them, you need to issue, and you need to document all that. Material issue and pricing. There are many ways in which you can price the items that you are making, because you should be cognizant of the fact that as you make your orders, not all prices are the same, they fluctuate. And so you decide which methods to use. There is one, Fifo, first in, first out method. 2, Lifo, last in, first out. Then AFCO, average costing method. When you look at Fifo, Fifo means what came out first, which you ordered first. In terms of issuing, it should come first. For Lifo, what came out last, it should be issued last. It's the first. AFCO, you simply get the average. So you use the method that you decide. Now we want to see how things work through the example. Now I want you to look at this example. The following data will be used to illustrate the 3 common methods of stock valuation. We have Fifo, Lifo, and AFCO. Now, there is the first thing that we have to know. This data means on 1 January, you brought forward the balance of 1,000 units, costing at 50 kwacha per unit, and when you multiply, the total is 5,000. And then on 9 January, you removed or you issued 40 units. And on 15 January, you received 50 units costing 55 kwacha. And then the value is, when you multiply, 2,750. On 20th January, again, you received 50. And the relevant costs are made. And then on 29th January, you issued 70. Now, the logic behind this one is that when you are removing the materials or you are issuing materials from the warehouse, they are gotten from different price units. And obviously, the way you cost there should follow the relevant costing method. Supposing you are using Fifo, first in, first out, I want you to recognize the fact that you need to make a table like that. Normally in the examinations, the table will not be given to you. You just need to be very innovative and understand that this is a table that will help me to calculate what I have to calculate. Now, supposing you are using Fifo to cost or do valuation, look at this table in 2 forms. On your left, if you cut it in the middle, there's a left part, there's a right part. Let's go to the left. You have a column depicting dates. You have a column depicting details, and then the units and the price. That component is the receipt side, or what you receive. Going forward, you have the value. But then after the value, you have what you give out or issue component on the right. Then you have issue price, you have the value, you have the units. And then there's a balance component comprising units, the balance, and value. So when you draw this table, you never go wrong. It will help you to navigate through Fifo, Lifo, and AFCO. Now let's see, if we are using Fifo, first in, first out. It means we'll be concerned with what came out first. And then let's see, when we are costing it, it should really depict that kind of modality. For example, on 1st January, you came or you brought forward 100 units at 50. The value is 5,000. On 1 January, you issued. Now, if you are using Fifo, the question is, when you were issuing from the warehouse to production department, where did you get it from? Obviously, what was there was 100. And when you got 40, you subtracted 40 from 100. And obviously at the rate of 50, because you're using Fifo, that 100 came first. And then what remains is 60 at 50. The value is 3,000. And then you went on to 15th January where you received 50 units at 55. And the value is 2,750. And you update the extreme right of your column where you bring in what came first to add it to what was there. Then on 20th January, you received 50 at a different price, which is 60. The value is 3,000. Check what happens on the right you update. You see those lines where you update what you have received. And then on 29th January, you made issues. So you must know, if I issue, from where? The answer will be what costing method or evaluation method I'm using. If you are using Fifo, obviously you remember you remained with 60 at 50. That one goes out first. Then the next one goes out first. And then the closing stock will be 40 coming from the segment of 55 kwacha per unit. And then you have the latest, which is 50, coming from 60 kwacha per unit. Let's look at Lifo. Lifo is the opposite. I should mention that the table is the same, but the difference is you are looking at last in is the first to go out. Look at the balance you came with, 100 at 50, and then the value is 5,000. Now, my interest is when you issue from which batch. You have no other. You have from 100. So you issue the 40 from 50 kwacha per unit. The value is 2,000. And you remain with 60 costing at 50. And then the value is 3,000. Now, you received on 15th January 50 units costing 55. When you multiply, you get that, and you do the update on the right side. Again, on 20th January, you received 50 units at 60 kwacha per unit, and then you have 3,000, and then you make the appropriate updates. But the question is, when you issue, from which batch are you issuing? As long as you are using Lifo, meaning you are issuing the fresh one, the last in to come is the first to go out. When you check on 20th January, the last batch to come were 50 units costing 60 kwacha. So this is what goes first. And then you actually move upwards, the opposite of Fifo, and then you have the balance that remains from there. When you are saying AVCO, the table remains the same. You are using average. You are not looking at specific prices, but you are looking at the average. For example, on 1st January, you brought forward 100 units costing 50. You multiply, you get 5,000. Now, when you issue 40, now check the way it is. When you issue 40 there, 40 units, issue price 50, then the value is 2,000. For AVCO, the core issue is divide the value on your extreme right by the number of units, and then the price is the issue price that comes right in the middle. So the tables remain the same, except here, to find the issue price, you have to divide the value over the units, and then the logic just goes like that. Now, just have a clear look at that. But what is very salient in your mind is that the price at which you dispatch should be a quotient of the value on the extreme right over the unit.